this is part 2 of my real estate series. The 7 topics I'm discussing is what you need to buy your house, and in this vlog covering credit score. The next vlog will be on property valuation. The fourth vlog will be on closing the deal, ABC, always be closing. Number 5 will be on timing the market. Number 6 will be the type of real estate, and number 7 I will be concluding with passive income. So let's talk credit score. Okay, so what is a credit score? So credit score is the bank's back-end calculations of how to assess your credit risk, your risk of running away and forfeiting on your credit payments. You've wondered how it's possible that your colleague who's earning the exact same salary has been approved for a loan, and the interest rate is either much lower than yours, or the bank has completely decided to decline your loan. So sit back and watch. So when you apply for credit, the first thing the bank looks at is your track record for the last 6 months, meaning all the financial information that they have access to, the stuff that will reflect on your bank statement for the last 6 months. That will be the stuff that they will be looking at. Also, the bank has a system called Experian, where all of the financial services providers store their information. This is the same system which they use to blacklist people. So on this system, all your outstanding balances and your opening balances, the initial amount that you've lent, that information will be allocated on the system. It will reflect your monthly payment and the opening balance and when the loan is supposed to stop. It will also reflect if you skipped any payments in the past. So that's in terms of the last 6 months. And next they will look at how many times you've applied for credit. Then on the system of Absa Bank where I work at, there's also a record for the past 24 months. So 6 months is important, and the past 24 months. It works on a system where it shows a 0 or a 1, meaning the 0 means that if you skip any payments in the month, so there are 24 months, in the 24 months prior, if you skip, it will show a 1 if you have 1 credit facility, and if you have 5, it will show 5, and then all of those companies will be listed on which you skip. And 0, you reflect that over the past 12 months you haven't skipped once, which is very good for you. If you go onto the system of Kudo or Clear Score, you will notice that the bank also keeps track of if you've had credit for more than 5 years. So why they would keep track of if you've had credit for more than 5 years, this is something known as flight risk, whether you default on your credit and no longer continuously pay. If you've had credit for more than 5 years, it means that you are very trustworthy. Then other factors that affect your credit score: are you married? Are you married in community of property? Community of property if your wife, yes, your wife, your spouse, sorry for the guys in the gay community, if your partner has defaulted on their credit, then it means when they get liquidated that the bank can also come after the spouse if they are married in community of property. If you are married with ANC, anti-nuptial contract, there are 2 sides with accruals, meaning that once you got married, then everything you accumulated after you got married is divided into 2. And then another one is married without accruals, meaning that What's yours is yours and what's mine is mine. That's another question the bank will ask. Your qualifications, whether you are a professional, a lawyer, a doctor, an engineer, the list is long, scientist, whatever. Your qualification is important, whether it's a diploma, a degree, a master's degree, a PhD. Those questions, they are listed in the system. Then the sector that you are working in, that information will also be inquired from you. If it's the financial sector, if it's medicine, education, the list is long. Then your affordability, meaning after once you've received your income, your taxes were deducted, your monthly expenditure, meaning after all your financial services has been, financial service providers on which you've lent money has been paid. Then there's your affordability, so your income, then your tax gets deducted, then all your expenditure, all your expenses, meaning all the financial services providers that you've got loans from, whether after they've been paid, your groceries, your insurance, after all of those deductions, how much money do you have left? That is the affordability. That's the amount you can afford to pay future credit. And one last more thing, if you're going to buy a house, real estate, then they will also ask your current rent that you are paying, and they will ask you whether this rent will remain after you've purchased your first real estate, your first house. I always make this example of, let's say you are a father of a daughter and it's your only child and you love this daughter very much. So one day your daughter comes home from university and she's got a boyfriend that you've never ever seen before. You know nothing about him, you know nothing about his family line, what his qualities, his personality or characteristics are like, whether he's a criminal, he's a serial rapist, an abuser. You know nothing. All you know is the face value. And in life, it's not fair to discriminate, but we have to discriminate, and people has developed this protective tendency to protect themselves from getting harmed. So this daughter comes home, it's Easter weekend, she's just been to university since February, March, April. It's Easter weekend and she wants to go away for the Friday and come home on the Wednesday. You've never seen this guy. What do you think are the chances of you saying yes to your daughter going out with this guy to a place or a beach, hotel, a beach, house that they're renting from Airbnb? What are the chances of you saying yes because you've never met this guy? Even though you've taught values to your daughter and you do trust her discretion, kids do make mistakes and rather safe than sorry. So if it was my daughter, it would have been a hell no. So in order for people to gain trust, you first have to show that you are worthy. Otherwise, you will become the victim of many scams in business, investments, crypto, you name it. Scams, they exist and they are everywhere. And in this day in time, there are criminals working out in the real world. So we have to protect ourselves. So how do you get a good credit score? First, you have to gain trust. So for the guy dating your daughter, if he had been dating your daughter for 2 years and nothing out of the ordinary has happened, meaning he's never beaten your daughter, your daughter has never complained, you've seen the guy come there, he knows when to go home, he respects your daughter's curfew, he seems to have a nice personality, the guy has had a couple or a few conversations with you. He seems to have some form of intellect. In the couple of occasions that you've talked, you've asked or inquired about the guy's future plans, whether this guy will be able to take care of your daughter, meaning should she maybe get pregnant, mistakes happen. Um, should this guy be able to take care of your grandchildren or take care of your daughter? So that's how we establish trust. And if the guy had been dating your daughter for 2 years, chances are you would have probably said yes, because he's established a track record. So, with the bank, like with your daughter, you establish trust. So, let's continue with this example. So, let's increase the possibilities of you saying yes to your daughter for going away for the Easter weekend. So, let's say over the span of 6 months, the guy has proven no track record of abuse, respected the curfew, and then his family, the family has dropped the guy off at your house. You've seen the parents, you know their pedigree, their line of jobs and work, and when the mother drops off the son, the father or your wife, they engage in conversation, and then you kind of get a feel of the principles that has been installed in this child, the other parent's outlook on life, and it's how you get a feel. So should now one weekend the guy comes and he requests that their family, the mother and the father and this guy and sister or brother, they are going out for a weekend to the beach or to their beach house, you probably would have said yes. And that's how you grow trust. So let's talk bank, let's talk money. So with the bank, I have a credit card with more than 200,000 of a limit, which is in my career of banking, this is probably unheard of. I've only heard about one person with such a high credit card limit, and I managed to engineer this over time with the behavior that the bank wants to see. So let's argue from scratch, from zero. So let's say you've just graduated from high school, or you've just started your first job fresh from high school, you've got no credit record, you go to the bank, you have a high salary, you want to buy a car, you can afford to buy a car because you have so much money left, you've got literally no expenses. Unfortunately, you get a reality check. The bank declines you. You are upset, you want to close your bank account and move banks. Many of us has been through this situation. It's completely normal. It relates to the story that I've just told you. So let's fix the story. So what's the process that you should take to improve your credit score? So the first one would be to open up a check account. A checkers account is an account that can go into a negative. So meaning you should always maintain a positive balance and ensure that there's always money into your account. Then you would become eligible for, after a 6-month period, the system would have kept a track record of the money that is circulating in your account and what you are spending your money on. It's able to track and calculate what you are spending your money on. So after 6 months, it would have established a risk profile, but not enough for the bank to issue you with big amounts of credit. So now you become eligible for maybe an overdraft, a small overdraft, or maybe a credit card with a very small limit. And over the next 3 months, the bank will update on the 5th of every month on Experian, the credit system that all the banks are utilizing. You can check your credit score on ClearScore, an app or app you can download from the Play Store on Google, or you can download Kudo, and maybe there are many other platforms where you can calculate your credit score. So this is the system that the bank will update the information on any credit that you've taken up with a financial services provider, a registered financial services provider. So after your 6 months, you've now qualified for a credit card, you've qualified for a bank overdraft, you would still not qualify for a vehicle. So now you would get a small credit amount. And how you can have a credit card and not use any of that money at all over the next 3 months. Then you might be able to become eligible to increase your credit card limit. You will be able to qualify for a personal loan of much bigger or a substantial amount, let's say a bigger amount. And after another 6 months, which means that you now have a track record of 12 months of having been exposed to credit, and you've paid your overdraft, your check account, your credit card, you've paid every payment on time, your payments hasn't gone into arrears. That means that's what the bank wants to see. Also, you are not spending all of your money recklessly. So now you would become eligible for bigger amounts of money, and you do that over the course of the next 2 years. Get credit, increase your credit card limit let's say after 6 months you get your first credit card. So after another 6 months you can apply for a credit card limit increase. They will give you what is called a quote. You don't have to accept this quote, you can just check what they're offering and then not take it up, and then come back after another 6 months and apply for another quote, and then you would see that the amount now being offered is substantially bigger. So now I would suggest you start using your credit card. So if you would buy groceries of 2,000 Rand, and listen, you have to be very careful, because don't slip into unnecessary credit. So if you were gonna buy groceries on credit, if you're gonna buy groceries with your debit card or your check card, I would suggest to put your salary into the credit card and purchase the groceries on your credit card and keep the balance on zero. You keep doing this. You spend your entire salary you spend all of your expenses on your credit card, and you keep the balance at zero. This would tell the bank that you are able to manage your money and that your credits or your expenses is not increasing at an increasing rate, meaning every month you are spending more and more, and you are spending more than you are earning. So now you've established a track record. This is the perfect situation of the boy respecting the curfew, not abusing the girl looks happy, the family of the boy she's dating is there's no problems, no alcoholism, everything seems intact. This is the situation where the daughter has now been out with the family for a weekend, for 2 days, Saturday and a Sunday, and she's come home, everything is fine. Another occurrence has happened, nothing happened, and now after 2 years the guy comes and he requests to take the daughter out for a trip with his buddies at university, going away for the Easter weekend. And obviously you would say yes. If it's the 21st and they are going to spend 3 days, you would say yes, because 2 years, if anything could have happened, it should have happened by now. So by all means, you would say yes. It's the same with the bank. Being trusted with credit, small amounts, and then incrementally it increases, and the bank can see that you are adhering to the payments on time, you're paying on time, and now you're going from a 600 score, which is around risk free, going to a B plus or a B minus, and you're paying on time, going from 700 to 900 after 2 years of credit. So the bank looks at the performance over 6 months, over 24 months, and then over 5 years if you've had credit for longer than 5 years. So this would be your credit risk factor. So some other interesting things. So if you skip any payments in the last 24 months, it would show up on the database that you've skipped. But if you've caught up, it might not be into your favor. It's just gonna be a notification popping up. Over indebtedness, meaning the interest rates and the minimum payments of all the debt that you occupy is now more than your salary. This is called over indebtedness. Then it means that you go to risk 5 and you would never ever qualify for credit. Your available cash flow, meaning after all your expenses, how much you have available to pay for new debt, that would also be a factor why you would get declined. So let's say you are earning 10,000 rand, your utility bills and housing operating expenses are 4,000 rand. This is now 10,000 after tax. You are left with 6,000 rand, and you want to take up a loan of 500,000 with a payment of, let's say, 10,000, just for argument's sake. Then it means that you won't be able to afford. So you don't have the affordability to pay for the 500,000 rand loan. So there are also different types of loans: a secured loan and unsecured loan. Secured loan means you have skin in the form of an asset that the bank can take should you default on your credit. And then there's unsecured debt, your credit card types of loans, personal loans. So if you forfeit on your debt, the bank cannot take anything. So to summarize everything, your risk factor is what determines your interest rate, how quickly the bank can get their money back, and your risk of defaulting on your credit that's owed to the bank. And this you gain over a period of 5 years. The older you are, the longer you've been working, the longer you've had debt, the more information the bank has to work with in order to assess whether you will be able to repay the bank.